Now let's go over the loan conditions, which are one of the most important components in closing a loan. If you can't figure out exactly what the underwriter is asking you, you won't be able to close the loan. Sometimes they'll ask you for things that don't make much sense. When that happens, you need to contact them or call them or email them and ask them exactly what they're asking for so that you understand exactly what you need to obtain so that you don't provide them with the wrong information. And so there aren't any delays in the loan process. Let's start all the way on the top. So over on the left, there's going to be loan condition numbers that will reflect the specific code for that specific condition. And then they'll be broken down into different categories. So you're going to have the master, in this case, for this lender. And then there's going to be prior to final approval, underwriter to obtain and clear. So this is the underwriter's required conditions to be obtained by them. Closing conditions or prior to funding conditions. So that'll be below that all the way on the bottom. Now, even though there are some conditions that are prior to funding and there are some conditions that the underwriter needs to obtain, you will be able to still help them out and provide them any of those documents. And sometimes you might be the only one that can provide them those documents. So you want to make sure you read over all these conditions and help them out and provide those documents to prevent any delays which will affect the service the borrower is receiving, and a lot of times it'll affect any future referrals to the loan originator or whoever's working on the loan file as the loan officer or loan originator. So let's start with the master conditions. So under credit, it says loan restructure required as of, and then it'll have the date, due to total expense ratio. And we already know that because we saw on the top that the debt to income ratio is 50.85%. So it's already past what the limit is. And it's asking here that you need to submit an updated 1003 and a 1008 and other relevant restructure documentation so that the correct loan amount reflects. If a change of circumstance is required due to the changes, complete a change of circumstance request. And if restructure conditions are not received within 7 business days, the loan will be automatically denied for insufficient income in relation to total debt obligations. So this is very important. Over here, you're going to need to review if there's a way to lower the loan amount, and then if the borrower has to come in with more funds at closing, that's perfectly fine. You just need to disclose that to the borrower and then verify that they have enough funds to be able to close. If they don't want to pay off specific debts, then the loan amount can go down as well. So there's many ways to solve this problem. Another way to solve this problem is by either paying additional debts, and then the monthly payment will be lower and the debt to income ratio will be lower as well. Now let's go over the conditions that appear under prior to final approval, or PTD. For the appraisal, it says final inspection is required to confirm the following has been repaired. So in this case, the appraiser says there's an active roof leak that needs to be repaired by a licensed roofing contractor. To be able to comply with this appraisal condition, you would need to let the borrower or loan originator know that they need to have this taken care of so that the appraisal can be rescheduled so that the borrower can have the final inspection completed, where the appraiser will contact the borrower again and let them know that they need to go back out there, and they'll set up an inspection date, and then they'll go back out there and review that the roof leak has been taken care of. Going further down where it says credit, payments for all mortgages paid off must be documented monthly through the disbursement date. Provide documentation to evidence that each payment has been made in the month due. So what this basically means is that the underwriter wants to verify that the most recent mortgage payment has been made already up until the disbursement date. Now, to be able to provide documentation evidencing this, you would simply need to have the borrower send you their bank statement showing that the money came out of their bank account and is not pending being withdrawn. It was actually already effective. So that's all you would need for this condition. Now, where it says underwriter to obtain and clear, this is what the underwriter needs to obtain. Sometimes you'll be able to help them out. Sometimes this is something that they can do. If the loan does not disperse by 11/30, documentation evidencing November payment has been made will be required. So in this case, they're going to need a bank statement showing that the November payment was made if the loan doesn't close by 11/30. So in this case, you would be the one that would need to obtain this by asking the borrower to send you this if for any reason the loan did not disperse by 11/30, which is November 30th of that year. A little bit further down, again another credit condition. It says underwriter to approve the change of circumstance requested for appraisal value from $368,000 to $379,000. So when the appraisal came back higher. Instead of $368,000, which was estimated initially, the appraisal came back at $379,000, which is actually better for the borrower because it makes the loan to value lower as well. So this is a big plus or big benefit to the borrower. Closing or prior to funding condition. Now there's a cash out refinance condition where it says TC. TC is an abbreviation for title condition. So the title company will need to provide this to the loan processor. It says, loan is a cash out refinance. No power of attorney is allowed. So when they have a power of attorney, this basically means that the borrower is going to actually need to sign the closing documents. They can't have somebody else sign it for them by giving them a POA or power of attorney. Under credit, it says title condition, title closing agent to disperse all non-mortgage debts listed on the final HUD or lending closing disclosure. If changes are required, loan must be returned to the underwriter for approval. Now in this condition, when they're mentioning all non-mortgage debts, they're basically stating that all the debts that have nothing to do with the mortgage, which would be credit cards, car loans, personal loans, or anything else that's being paid off through this refinance, will need to be disclosed on the final HUD or the lender's closing disclosure and need to have accurate information. So it says here if there are any changes, which basically means if one of the debts is higher or lower than what was initially disclosed, then it needs to be sent back to the underwriter so that they can make sure that the loan amount is correct and the borrower still qualifies for the loan. Under prior to funding conditions, we see income. It says title condition, business returns have been used to qualify. Now, in this case, the borrower must sign a 4506T form for that specific business. Forms to be returned in closing package. Now, the 4506T will give the lender permission to be able to check to make sure that the tax returns that were provided are actually the same documents that the IRS has on their side. Invoice. Provide copy of invoice for credit report. This can be provided by the loan originator, the loan processor, or anybody else who has access to the credit provider. Now, all you will need to do is obtain the invoice, not the actual credit report, and then you would upload this to the lender's portal and be able to comply with that condition. The second invoice, it says here, provide copy of invoice for final inspection. Now, when they're referring to the final inspection, they're referring to the appraisal that was completed. And as you know, if the borrower has to have another inspection done, the appraiser will charge for that additional visit over to their home. And when they charge for that, it needs to be paid. And once that's paid, they'll be able to provide you with a copy of the invoice. Sometimes the appraisal company or the AMC, the appraisal management company, will be able to obtain this and will be able to provide that to the underwriter directly. But if that's not the case, you can go ahead and request this directly as well. Under title, it says TC, title condition. Title company to verify all sections of the borrower attestation to make sure it's fully completed and executed by all borrowers at closing. And these would be all the conditions that would need to be provided to the underwriter, and they need to be provided in a specific time frame to make sure that the lock on the interest rate does not expire and that they meet all the requirements that the underwriter has. Remember, in this case, if the loan doesn't disperse by 11/30, then you're going to need another condition, which would be the bank statement showing the November payment. But if you closed or the loan dispersed before that, then the borrower wouldn't even have to provide this condition, for example. So that's something important to take into account. And this is how you would go over conditions in a general sense. As you can see, there's not a lot of conditions on this loan. If it does feel like a lot, this is basic information, and with some practice, you'll be able to complete any of these conditions or provide these to the underwriter in no time.